Oh, good morning, good afternoon, good evening, depending where you are on the planet, and welcome to the uh, delayed running. Not late running. Well, we are a little bit late running as well, but delayed. We had to push back the webinar today, and so we're half an hour delayed on the start. And welcome to the Tuesday the 14th webinar. Steve Miley on the call here for Trade Day. Welcome everyone with the Bull versus Bear webinar. So we're going to run through, as usual, the calendar, what we've had, what we've got coming up. We'll take a look at the macroeconomic geopolitical fundamental events which are driving markets right here, right now. And we'll also take a look at the charts, see what's happening on those charts where the opportunities may lie as we go into today. So having said there's a possibility of maybe a market trying to recover and bottom yesterday before the US Open. That just didn't materialize. We did go in looking at it, the charts look bearish, look bearish. What was the risk of extension with markets already significantly lower? Well, the risk was that they did go lower, right? And Nasdaq almost ending up 5% down, and but certainly way into the 4% its lows. We have had an overnight rebound, so futures are rebounded in here. European stocks stabilizing, not an aggressive rebound, far from it. We'll look at that and dissect that, see which way the opportunities lie today. But let's take a look at what's going on, what data we've had, what's coming up. So let's kick off in here with the calendar with the data. So for today, we've already had some UK data in here. The employment report in here, and it does show you see a mix of green and red in here, so some beating expectations, more jobs added than anticipated, but also look, average earnings falling in here, so that's going to take some of the heat out of the inflation numbers. And I think there's an article in here. So look, UK job market loses some of its inflation heat. So unemployment rate rises to 3.8%. So first increase in over a year. And jobs growth beats forecasts, but real wages eroded by inflation again in here. The pound was lower in here, and bond yields actually slipped on the back of that. So basically indicating that maybe the Bank of England. So the Bank of England due on Thursday after the Fed to an anticipation of a rate hike in here, but maybe they're going to be starting to be a little bit more cautious, because we're certainly seeing the jobs market is already cooling. Okay. Unemployment first rise for over a year, as I say. And if we go back to the data in the UK, and now I know you guys and we're trading. A lot of you guys are trading. Most of you are trading in your US products, but what you have to take into consideration some of this data, particularly the UK. You could argue the UK is maybe even a little bit ahead of where the US is. Remember the UK, the Bank of England hiked rates last year before the Fed hiked. Okay, arguably the first major central bank to hike rates, the Bank of England at the end of last year. So, and I say, look at this average earnings number. So this is lower than anticipated. Okay. And obviously way below the inflation rate. So expected at 7.6, coming in at 6.8. So what it's telling us is that the market is starting to cool already. German ZEW data as well. This is an important survey in Germany. Again, mixed in here. One of the numbers in here being one of them missing expectations. The more important one, the economic sentiment survey, missing expectations in here slightly. So then that obviously a negative as well. Going into today, we do get OPEC monthly report. Probably not going to be a big deal on that. What's probably more important, the PPI data. But again, PPI is not a big mover of markets, but nevertheless, we will be watching it, because obviously all eyes are on inflation. So certainly keeping an eye on in the PPI data, which is coming out in about, well, there you go, 24 minutes time from now. So what's going on? Well, I don't need to tell you guys in here. Let's go to 5 things to start your day. But another route. We were already lower when we spoke yesterday, significantly lower. The market gapping lower on both the futures market and then the cash market. Obviously, even a bigger gap on the cash market for the US stock indices yesterday. We have had a little bit of a relief rally in here overnight. But the S&P did post yesterday a bear market signal, down 20% from its highs. But we are looking for a small rebound in here this morning. Fed fever, what are the Fed saying? We'll come to the CME tool in a moment. Really interesting how it's shifted from where we looked at it even yesterday pre-open to now where it's at. Traders in the bond markets are fully prepared for the Federal Reserve to raise its benchmark 75 base points now. While Chairman Joe Biden has vowed to increase the Fed fund rate by 50 points this month, a report in the Wall Street Journal suggested policymakers were considering a bigger move after the inflation accelerated. Okay, if we go and take a look at And look, and JP Morgan also said there was a non-trivial risk. So there is certainly a risk. Let's go and look at that article actually, of 100 basis point. That would be a big shock to the market. JP Morgan, of course, now sees Fed hiking 75 basis points this week with a non-trivial risk of 100 basis points. And if we go and take a look at the Fed tool for, this yesterday, right, was about 70. About 70%, I think it leapt up to for now a 75 basis point high. Maybe it wasn't even that high. Now look, almost nailed on. This is now for the 50. Okay, remember the Fed funds rate is currently 75 to 100. So 50 is what this is, only a 5% chance for 50. It's now saying it's a 95% chance we get 75 basis. Not actually pricing in anything for 100, but there is probably a risk of that. And if we go further out now to the July meeting, what's it saying? Well, 225 basis points to 250. That is up 150 basis points. So by July now pricing in 275 basis point hikes. Okay, and with only a small chance of a 50. This is a 50 and a 25. 250s now is basically there's no chance. They're always saying no chance of 250s. Saying we're going to get at least 175, which is in here, and only a small chance of 175. Maybe now a big chance of either 275s or a 50 and 100 in here. So this is a total of 150 up by the July meeting. Okay, so that's significantly higher, than where we were just even on Friday after the payroll report. After the inflation report. Even after the inflation report, we're nowhere near these numbers. So because of the significance of the moves over the past 24 hours, we're now seeing the bond market, the interest rate curve pricing in a far more aggressive rate hike. I think equity markets are ultimately going to like that. Are going to like the Fed basically getting back up in front of the curve. Despite the overnight bounce that we saw we have seen a slight overnight bounce in crypto, but despite the overnight bounce that we saw, stock indices put in the lows yesterday and have rebounded subsequently. Crypto markets actually went lower again overnight again in here, and real concerns about with Celsius, a lending platform, freezing withdrawals, and also Binance as well. So real concerns of contagion fears in the cryptocurrency market, which took them still lower down. Bitcoin was sub 21,000. And obviously, a lot of big target for people is to get down to 20,000. Bank of England faces more grim economic data ahead of Thursday's meeting, so we've already looked at that data in here. Data picks today in here. We do get the PPI data in here due out in just about 20 minutes time from now. Okay, let's do a whistle stop tour through the headlines because you're going to know these headlines anyway. Really, we've just looked at this one in here. JP Morgan predicting 75 basis points now tomorrow. Futures parry gains. Okay, so even though they did get a rebound in here, the market kind of initially rebounded this morning, and now has actually given up a little bit of that in here already this morning. Stocks tumble as rally fades, market wrap. So that's basically from yesterday in here. Beleaguered yen battles backers. So yes, the yen has actually started to rally a little bit. In fact, I think the yen has actually outperformed nearly every other currency over the last, basically since Friday. Dollar yen has kind of been sideways. It has nudged higher. Did hit. We said yesterday it did hit its highest point of this century to a highs not seen since 1998. It took out a resistance from 2002. Pushed to its highest level since 1998, the highest point of this century. However, dollar yen's not really accelerating higher. And the reason for that is yen is still seen as a safe haven. The other currencies are doing far worse. The euro, the pound, the Australian dollar, the Canadian dollar, the New Zealand dollar, these other major currencies in here suffering significantly against the US dollar. Dollar yen is kind of, even though it has lost a little bit of ground, after the dollar, the yen is now seen as the next really strongest currency as a safe haven, as we kind of would expect, although has obviously been beleaguered more recently, to say the least, because of that interest rate differential between the US and and Japan significantly widening, with the Bank of Japan still very much committed to a very dovish policy. Inflation data likely push Fed to consider 75 basis point hike. We've already kind of discussed that. Nothing new there. Bear market blues, test metal, most devout Bitcoin holders. So again, Bitcoin in here, Bitcoin down 20% this week. Okay, just this week. And as I say, down, went below 22,000 with a 21,000 big figure in here. The pound, as I said about the dollar strengthening, because that inflation, that employment data, the employment report from the UK this morning, the pound losing even further ground. And we're certainly seeing in here the pound, at its lowest level since March 2020 during the pandemic, the breaking out of the pandemic. Markets grow unanimous on aggressive Fed move on Wednesday. We've already looked at that again. Expectations now of a 75 basis point hike going into Wednesday. Futures have rebounded, as we said, after the rout on Monday. Nothing in here from these headlines we haven't really covered already. I'll come back to where we are in the on the stocks in here in a second. European stocks stabilized. So yes, we are having European markets in here having sold off a little further, have now stabilized, not gone too much further this morning. We've already looked at that's the UK jobs report in here. The bond market storm eases a touch, but bears still on proud. So the big sell-off to higher yields that we're seeing in the bond market, again stabilizing overnight, but not really seeing a decent rebound in the bonds either. And here's where we are going into today. Let's take a look at the European bourses first of all. European exchanges, yes, we're lower. This was because we played catch-up, remember. The US closed very, very weak. European exchanges were closed at that point. So European markets have gone still lower this morning, but they've bounced from their lows and stabilized. And if we go and look at US stock futures, having had that really bad day yesterday, US cash markets, the Dow was down 2.8, similar on the S&P. The Nasdaq was over 4% down. Here, though, you see this morning, not big rebounds in here, but stabilizing. Dow and the S&P slightly higher on the day. A little bit better for the Nasdaq, but only 0.4 higher. Now, this was actually up about 1% higher than Nasdaq. So even though we had a decent rebound, it's actually given up some of those gains already in here this morning. And we've already looked at the Fed tool. So going into today, markets still look kind of quite negative despite the kind of stabilization that we've seen in here. Let's go take a look at now. I just did want to say to you guys, remember to go and check out those trader quick tips to make sure you're trading the right front month. We're now on the September contracts on the equity indices. Let's take a look. This is the bond market. We said about it stabilizing. There's the gap lower yesterday, significant sell-off. The market has rebounded, but you can see rebounded, but then giving up some of that rebound in here. This is the daily chart on the actually on June in here. Let me take us to the ZNU because we should be on the September contract now in here, but it's the same chart basically. Oh no, I already set that one up. Okay, let me just move that, get rid of that, and I'll just get rid of these as well. So I'm not looking at those June contracts anymore because we're on the September contracts certainly for some time there on the bond market. This is the US 10-year note. So yes, here it is. We have rebounded, but look, rebounded and sort of failed a little bit in here. And I'm actually going to put in a go and take a look at the 15-minute chart on that one, and what we'll see when we zoom in here. Sorry guys, just move that across. Let me actually make this bigger. And when we zoom in on the 15-minute chart, so there's the rebound from overnight, but then already giving up some of this rebound. And now we've got lower lows and lower highs. So already the rebound that we've seen since overnight, since the losses, already starting to be damaged in here. And it's a similar story with the equity indices. So look, we had the bear gap, the big push lower, the breakdown below the May low in here, significantly low, 20% close off the highs from over here. On the cash market, signals the highs from the beginning of the year. That signals then a bear market. And then we go in the 15-minute chart. You can see from the candlestick there, look, we've had that rebound. We looked at this kind of this line in here. So we have got above that rebound on the overnight. We've got above that line on the overnight. Okay, we spoke about that line yesterday in here. So obviously we went a lot lower after we spoke. We were flirting here. The market went to another new low, and then so here's where were we speaking yesterday when it was over here somewhere, right? Yeah, this is the webinar yesterday around here, and the market fouled away, kind of PS fouled away. So kind of respecting this trend line, and this trend line comes from the acceleration from Friday. Okay, this is Friday, Monday's price action. Let's get rid of that. And then obviously we've gone sideways through that. And then we get a decent rebound overnight. But look, see this spike high in here? We fell below this spike high, that spike high and this high there. So these highs in the 38.15 to 38.22 kind of area. We fell from below that overnight, high at 38.07.5. And then look, now we've got in the 15-minute chart lower lows and lower highs. It is trying to stabilize in here above the low here and above, right from this low here. Got this little swing low 37.54.5 where we've been down to here 37.58 and then just recently 37.56. So it's trying to hold this level here 37.54.5. Down through there it looks bearish again. I can't be bullish in here on this. However, if it holds here and we start to get a rebound, if it holds this low, this 37.54.5, if we start to maybe get above this really small little counter trend we've got just on this morning's activity, this little one in here, you can draw it through here first of all. Okay, so through there, and then we've got like the slightly more accelerated line down lower, which the market's kind of been flirting with already. If we can get above here, I say if we can get above these little peaks in here, we're at 37.75.5. 37.78.5. Back above 37.78.5 starts to look more positive. Okay. However, back down through this low, it's negative, and for me, it's still negative. This has been a disappointing. We've got this overnight rebound, and we've given back a big chunk of that. If I just zoom in here and we look at on the fib, okay, there's the rebound from overnight. There's the sell-off in here this morning, and if we take a look at what we've given back, take a look at the Fibonacci retracement on that. Look, we've gone not only through the 50%, not only half of it back, but we've gone through the 61.8. So effectively neutralized the whole rally by going through the 61.8. That's kind of neutralizing the overnight rally going into this morning. Okay. However, we are rebounding now. So back above here, I think back above, as I say, 37.78.5. It looks a little bit better. Can see some upside. Maybe then that means you got the low in here, you get a secondary low going above, a bigger, higher low, and maybe then that opens up the upside. Just be interested in here. I think we're kind of way above it, but I'd also put in the add in another one in here. So you get to 78.6 is also an important Fibonacci number. I'm going to add that one in. Okay, apply that and save. And there's that. So we rebounded from significantly above that. That's the final retrace. And we rebounded, as I say, from above that low there, 37.54.5. If we hold there, I don't think we're going to see too much. We do have the PPI number literally now in about 10 minutes time. Maybe that gives us something on the upside. But, I'm bearish. You've got to be bearish going into this. But, as I warned yesterday, this market could easily turn around. The value buyers are going to come in at some point. They're not in yet. I thought they could come in yesterday. Didn't say they would come in yesterday, but they could have come in yesterday. They didn't come in yesterday. The market saw another, after we opened, the NASDAQ dropped another 1.5%. However, today we've got some stability this morning. European stocks are stabilized. We've got that data showing some kind of contraction in the labour market in the UK, and then we're fully priced in now for a Fed hike of 75. Right, we're actually pricing in pretty much 275s now in the next meeting. That's a lot of hawkishness. It's already priced into the bond market and the short-term interest rate curve. So the chances are that there is going to be a risk of this bottoming out and the market going high at some point. Not necessarily from here, but keep your powder dry, guys. Just be careful in here. Be careful of the fact that this could turn. Don't just stick to that uber bearish view. If we go back to the daily, look at the drop we've had. Look at the drop here. Boom, boom, boom. That's a huge drop, right? Even this sell-off that we saw in here through the early part of May in here was not as aggressive. It took taken 3 days. It took like 5, 6, 7 days in here to do it back then. Okay, it's taken just 3 days. It's a really significant drop in 3 days. Look at the daily RSI, as oversold as it's been since here. And what happened back here, the market found a base, okay, back here in January when it was this oversold. From a daily perspective, it's getting so oversold. It doesn't mean it can't go lower today just because we're oversold, okay? Another day lower is way within the capacity of this market, okay? However, it is showing potential for a basing structure, but we're not there yet. And, you just look at that candlestick, right? Look at the daily candlestick today, that's highly bullish, right? In fact, it's kind of negative. But whilst we're just about holding on the 15-minute chart, It's just about holding it. But look, we're giving stuff back even here as we speak in here. I still think this is negative. I still think it has another flush to the downside, but just watch out, okay? And I'm not going to go through all the same analysis because, we do have the data coming up and you guys will be trading. It's the same for the NASDAQ. It's the same story for the NASDAQ, And there's the daily chart. We undercut the low from previously from May. 3 really aggressive down days in here. If we go to the 15-minute chart, it's tried to put the base in. It's kind of semi-fouled in here. If we go and take a look at the Fibonacci retracement, what's that telling us of the rebound so far? What it tells me is we've given up, similar to the S&P 500. Top to bottom, where are we? We're through the 50%. We actually went through the 61.8. But again, it's holding this low over here. This low here is 13. Sorry, 13. Wishful thinking, 13. 11,344 and a quarter. Okay, it's tried to rebound. It's not there yet. Again, you'd be looking now. I'd be looking at the counter trend line off the top from the overnight activity. Look, great trend line here, 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 here. And it failed again just now here. It needs to get back above at least 11,420, really above that peak there, 11,436, 437. If it can't get through there, then it's still bearish. And then this is your trigger point on the downside over here, this low, 11,344 and a quarter. It looks negative still, but trying to stabilize, trying to put in a basing pattern. Let's take a look at the commodity markets, and I'm going to wrap it up so you guys can go and be ready for the PPI data. Let's zoom in. First of all, this is the dollar index in here. I think we're coming. Yeah, we've still got the data in here, but this is now going to be on the should be on the September contract, but we're not really looking at the levels on this. Another gap higher in here this morning. I see notice from yesterday pushing higher. Let me bring up the DXU. The dollar index. So that's this morning. Look, so we did make a new high yesterday on the September contract, and look, cautious in here. Again, similar, like upside down version of what we're seeing on those other markets, right? Down, but rebounded. So kind of cautious in here at the moment. Let's step in and look on the 15-minute chart. Again, look, so it's almost an upside down version of what we've been looking at. It's sold off overnight on the 15-minute. We've had the more recent rebound, but then that rebound's starting to falter. So keep an eye on that as well. This is a good correlation there. Let's take a look at gold. On the daily, big positive day back on Friday. Big, even more negative day yesterday in here. Really negative Marabuzo candlestick. It's in a bigger range environment, but really rejecting Friday's rally. I was bullish after Friday. I was bullish ahead of Friday. And then after Friday, I stayed bullish. Really thought yesterday this was going to break here, but completely eradicating that really negative candle. Been lower again today. I can only see this as being bearish. Go to the 15-minute chart. Looks really negative. Look, so there's yesterday's negative price action. It's rebounded and failed miserably. And again, we put the Fibo on that. Let me get rid of get rid of all the old drawing tools. We put the Fibo on this, and you can see it's been a real lackluster rebound. There's the sell-off from yesterday. And the market's not even made it to the 38.2% retracement, fading. Excuse me. Fading ahead of that, that little swing high there. Gold looks very negative to me running into today. And let's take a nod to oil. Resilient, dip and a rebound Friday, strong. Dip and a rebound yesterday, hammer pattern, strong. Nudging higher in here this morning. Go to the 15-minute chart. Wrong chart. That's gold. Here's oil. So look, dip and a rebound Thursday, dip and a rebound, dip and a rebound Friday, dip and a rebound Monday, high level consolidation up here so far today. For me, all the threat to the upside with oil. Right, I'm going to wrap it up there. Please do pop anything into the chat going forward, guys. Please use that chat. Please do fire any queries you have, anything you want covered on the webinars. Please do send them over on an email if you want. I can cover them in the webinars. If not, if you're live, throw us a message in the chat, just even if it's just to say hi. I'm going to wrap it up there. I'm going to wish you all a great trading day. Helmets and goggles on again. It's going to be a hectic one. And stay safe. Trade smaller, keep your powder dry, and I'll be back with you with the Bull versus Bear webinar tomorrow. Cheers.